Level 1, the earner. Top 1%. It's 9:41 at night. The Bloomberg terminal is still open. Your bonus hit your account at 2:17 in the morning. The number? $250,000. Your base salary is $240,000. Total compensation this year? $490,000. 10 years ago, that number sounded impossible. Now it appears on a compensation statement and disappears into taxes, into rent, into brokerage transfers before the week is out. Technically, an income above $200,000 a year puts you there, globally. That's it. And when you first cross that line, it sounds like an arrival. But then the other side reveals itself. Yes, you have a nice apartment, a nice car, you dress well, you eat at good restaurants, but your tax rate is roughly 45%. The lifestyle that comes with this income has costs built into it, higher costs, the kind that silently consume everything you earn. After a salary that would have sounded like a fantasy to your younger self, you still don't feel financially secure. You are a vice president at an investment bank. Analysts build the models, you run the process. You're still trading your hours for your income, just at a much higher rate. Your brokerage account recently crossed $1.8 million, genuinely significant. But it doesn't make you feel wealthy, not in the way you imagined. And that's when you start to understand something important. At this level, wealth is still being measured in income. But the further up you go, the more you realize that income is the wrong measurement entirely. The people above you aren't talking about what they earn, they're talking about what they own. Because beyond a certain point, you're not making your money from a salary anymore. You're making it from assets, from things that grow while you sleep. Your income is large, but income is linear. It arrives on payroll cycles. It stops when you stop. It grows one promotion at a time. The people above you don't optimize for salary. They optimize for ownership. Senior partners talk about equity stakes. Funds talk about carried interest. Nobody up there is discussing compensation. They're discussing positions. You are in the 1%, but you are still, in every meaningful sense, working for money. The next levels, money works for you. Level 2, the accumulator, $5 million net worth. The number appears gradually, not all at once. Bonuses, equity compensation, market returns, years of disciplined investing. At first, nothing visible changes. Same office, same midnight emails. But the math beneath the surface has shifted. A strong market year adds $800,000 to your portfolio. For the first time, money is producing meaningful money without your time attached to it. You move into direct investments, private funds, tax-efficient structures. The bank assigns you a dedicated advisor the year your assets cross $4 million. The language changes immediately. Portfolio construction, asset allocation, private credit funds, venture capital exposure. Your daily life changes too. First class internationally. A $2,000 suite on special occasions, without stress. Healthcare is proactive. You never delay anything for cost. No single emergency can financially destroy you anymore. However, you are still not rich in the way that money stops mattering. You're comfortable, you're protected, but you are not yet free. What you are is becoming an accumulator whose capital is starting to whisper back. And the moment your investments generate 7-figure returns in a strong year, something shifts. You stop thinking about building the pile. You start thinking about where to aim it. Level 3, the investor. $20 million net worth. Your net worth passing $20 million changes the way you evaluate time. A strong year can produce 2 or 3 million without a single meeting or phone call. Work becomes optional, and in its place arrives something you couldn't have anticipated: opportunity. You begin receiving invitations to deals that never appear in public markets. A venture fund offers you an allocation in its next round. A real estate operator invites you into a private acquisition of a $300 million logistics portfolio. A former colleague launches a private credit fund and asks if you want in. These opportunities don't advertise, they circulate through networks. The people presenting them aren't looking for investors, they're looking for capital partners. There's a difference. Your world looks different socially too. 5-star hotels, multiple residences. Monaco for the Grand Prix, Cannes for the film festival. A suite at $15,000 a night isn't a splurge, it's Tuesday. You have people that others have to go through to reach you. Want to play tennis with your favourite professional? A donation north of $100,000 to their foundation can probably arrange it. Want your favourite band at a private event? For the right price, they'll show up. If you can dream an experience, you can have it. The pattern becomes clear. The most meaningful returns don't come from public markets. They come from ownership in private assets. And once you begin owning pieces of businesses instead of shares of stocks, the shift happens again. You stop thinking like an investor. You start thinking like an owner. Level 4, the owner, $100 million net worth. At this level, you stop thinking in terms of portfolios. You think in terms of control. You participate in acquisitions instead of simply funding them. You sit on boards. Quarterly meetings replace quarterly earnings calls. Instead of analysing companies, you help decide their strategy, hiring executives, approving expansions, managing risk. The distance between capital and consequence becomes very small. ACPA handles your taxes. A financial advisor manages your plan. Money moves automatically. If your phone breaks, you replace it the same day. You donate to causes by shaping programs, not writing small checks. When it comes to what you buy, it's no longer about luxury, it's about rarity. You've graduated past the version of rich that impresses normal people. Now you're looking for things that impress other people at this level, and that means exclusivity. The fanciest jewellery, the cars most people have never seen in person, the world's most expensive iPhone, 24-karat gold casing, over 600 diamonds, sapphire glass, costs more than $15 million. You could. But real power at this level isn't in what you own, it's in what your capital decides. And once your money starts moving inside transactions measured in billions, your role shifts once more. You stop thinking like an owner. You start operating as a capital allocator. Level 5, the Capital Allocator, $1 billion net worth. Your net worth crossing $1 billion is not a celebration, it's a reclassification. You no longer think about individual companies, you think about capital flows. Your wealth sits inside funds, holding companies, and structured vehicles deployed across infrastructure, energy, private equity, credit markets. Teams analyze the balance sheets. Your role is deciding where capital moves next. And then there's what $1 billion can simply buy in ways that have nothing to do with things. Access. Your staff can contact almost anyone on Earth and receive a response within hours. Celebrities, CEOs, heads of state, especially because you are likely a significant political donor. You don't just vote, you have conversations with the people who shape policy. You are no longer a constituent, you are a peer. Impact. Your philanthropy changes lives by the thousands. Clean water for villages, new hospitals, funded research. You don't write checks to causes, you become the cause. At this level, wealth stops being personal, it becomes institutional. And somewhere in that shift, you realize, even billionaires are not the top layer. Above them are the people who don't just move capital, they design the architecture that moves capital itself. Level 6, the architect. Your wealth is no longer measured by a net worth statement. It sits inside structures, Trusts, family offices, holding companies spread across jurisdictions. You don't discuss individual deals, you discuss allocation mandates, infrastructure programs, sovereign partnerships, multi-year capital commitments. Governments want investment. Pension funds want returns. Global markets require liquidity. Your role is deciding where large pools of capital flow next, and those decisions shape industries long before the public notices. Your name moves markets, so your team manages every announcement with surgical care. Lawyers review filings. PR shapes the message. Security reviews your routes. The jet is fueled and ready. You don't trade in the market anymore. You help determine which markets receive capital in the first place. Somewhere tonight, a young analyst is opening a terminal for the very first time. He thinks this world is about money. He will eventually learn it is about structure. Conclusion: nobody has it all. 6 levels, 1 spectrum, a gap between the top and the bottom so vast it almost defies language. But there's something worth sitting with before we close. Even at the highest levels of wealth, not everything is gained. Some things are quietly lost. It becomes nearly impossible to have normal emotional relationships. Your world fills with yes men and people whose warmth is entangled with your net worth. Knowing who genuinely loves you and who loves your access becomes its own exhausting puzzle. Trust gets expensive. Dating becomes strange. Finding a genuine connection, someone who's with you because of you, not the lifestyle, is harder than it sounds when your time is so consumed that deep connection requires investment you're always borrowing from somewhere else. Nobody has it all. Nobody. If you're watching this, you are not at the bottom of any pyramid. If you have internet access, food available, a place to sleep, clothes on your back, you are wealthier than 75% of the world's population. Not metaphorically, literally. It's natural to look up this ladder and feel the gap. But just turn around for a moment. Look down. Rich versus poor was never a line, it's a spectrum. And somewhere on that spectrum, compared to most of the world, you may already be a great deal richer than you realise. To everyone who made it to the end, if someone tells you you can't, they are showing their limits, not yours. Not yours.